Ladies and gentlemen, good day and welcome to Ducon Infratechnologies Ltd Q3 and 9 months FY2026 results earnings conference call hosted by Kirin Advisors. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations of the company as on date of this call. These statements are not guaranteed for future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participants' lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sakhi Panjiara from Kirin Advisors. Thank you and over to you, ma'am.
Good day, everyone. On behalf of Kirin Advisors, I welcome you all to the Q3 and 9M FY26 conference call of Ducon Infratechnologies Ltd. From the management team, we have Mr. Arun Govil, Chairman and Managing Director, and Mr. Hari Sethi, Chief Financial Officer. Now, I hand over the call to Mr. Arun Govil for the opening remarks. Over to you, sir.
Thank you, Sakshi. Good day, everyone. And thank you all for joining us today for our Q3 and 9 months fiscal year 26 earnings call. So right now, I'm just going to give you a little introductory remarks and tell you what we have been doing. So let me get started. At Ducon, we have consistently positioned ourselves as a technology-driven EPC company operating at the intersection of environmental engineering, clean energy, industrial infrastructure, and process industries. Over the last few years, we have consciously strengthened our capabilities across advanced emission control systems, clean energy solutions, digital optimization platforms, and now carbon capture technologies. The current macro environment strongly supports our strategic direction. India's industrial capex cycle continues to strengthen, driven by infrastructure expansion, energy transition investments, tightening environmental norms, and increasing industrial compliance requirements. Thermal power plants, steel producers, cement companies, refineries, and chemical manufacturers are undergoing pressures to adopt advanced environmental control systems. At the same time, grid reliability requirements and rising AI-led data center demand are driving incremental power generation and modernization needs. In parallel, the Government of India's recent budgetary allocation of 20,000 crore towards carbon capture, utilization, and storage marks a structural shift in decarbonization framework. This policy validation aligns clearly with our early investment into solvent-based carbon capture R&D, which we initiated well ahead of formal policy backing. We believe this proactive positioning provides Ducon with meaningful technological optionality as the CCUS ecosystem evolves from intent to implementation. During the quarter, we also strengthened our digital and AI-led offerings with the launch of our IQ Energy AI platform, designed to improve operational efficiency, optimize plant operation performance, reduce downtime, and support utilities managing rising demand from AI-driven data centers and industrial load. This reinforces our strategy of combining core EPC capabilities with technology-enabled life cycle services. Our long-term strategy remains anchored on 3 pillars: technology differentiation through proprietary systems, process engineering know-how, and early-stage innovations such as carbon capture R&D. Execution excellence, leveraging our EPC experience across environmental and industrial projects. Life cycle services and digital integration, expanding beyond installation into operations, maintenance, and performance optimization. We believe these pillars position Ducon not only to benefit from the domestic industrial upcycle, but also to capture emerging opportunities in clean energy and decarbonization. Now coming to our consolidated financial performance for Q3 fiscal 26. Total income for Q3 fiscal 26 stood at 94.31 crores. EBITDA was 5.84 crores with an EBITDA margin of 6.19%. Net profit for the quarter was 2.31 crore with a net profit margin of 2.45%. For the 9 months ended fiscal 26, total income stood at 321.18 crores. EBITDA was 20.82 crores, translating into an EBITDA margin of 6.48%. Net profit stood at 9.1 crore with a net profit margin of 2.84%. Business outlook and strategic positioning. Looking ahead, we see multiple structural growth drivers: tightening emission standards across thermal power and industrial sectors, accelerating industrial capex across steel, cement, refining, digital modernization of utilities and process industries, emerging CCUS opportunities backed by fiscal support, continued demand for reliable baseload power supporting environmental retrofits. India's carbon capture and storage market is projected to grow at a healthy CAGR over the next 5 years, supported by regulatory push and fiscal incentives. Given our early R&D investments and EPC capabilities, we believe Ducon is well positioned to participate in this next wave of industrial carbonization. Our focus remains on improving execution velocity, strengthening margins, maintaining financial discipline, and selectively investing in high-potential technological segments. We believe Ducon is entering a structurally favorable phase where policy tailwinds, industrial demand, and our internal capability building efforts are beginning to converge. We remain confident about our long-term growth trajectory and our ability to create sustainable value for stakeholders. With that, I would now like to request moderator to open the floor for any question.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Varaj Shah from Shah Infra. Please proceed.
Yes, please go ahead.
Varaj Shah, are you there on the line now? Sir, as there is no response from this line, can we move further?
Yes. Hello.
Okay. The next question is from the line of Udit Gupta from NGA Stock. Please proceed.
Hi, good afternoon, everyone. Am I audible?
Yes, sir, you're audible.
Yes, good afternoon. You are. Yeah. Yes. So my first question is regarding the 5 crore investment disclosure the company has given. So could you please explain in which company this investment has been made?
Yeah, this is Harish Shetty. I'm the CFO. Now, see, this particular investment was made in a company called Ganpati Infra. Basically, you would be aware, this Ducon is a resultant company of a demerger, which has happened in 2018. So there were two companies. One is Ducon Technologies India Private Limited, and the second one is Dynacons Technologies Limited. So now, since you have taken the entire balance sheet of Dynacon Technologies as part of the demerger scheme, certain long-term assets and liabilities have come along with that, and this is one of them. So, as rightly highlighted by the auditors, we have considered that as the cost, even though we have in fact 1 or 2 years back, last year, I think, we have taken the CA certificate about the earnings from this particular investment, but we have maintained the overall investment at the cost.
Okay. Okay. And my next question is regarding the revenue breakup from FGD systems and bulk material handling. Can you please give a percentage split? Because you have reported it in industrial EPCs, but you generally in your investor presentations and general communication from the company, it shows you are mostly dealing in FGD and bulk handling.
Right.
Well, we don't really give a breakdown as per se because it's all part of the infrastructure group because they do require a lot of turnkey work, both type of projects, material handling and all that. Sometimes there's civil work, steel erection work and all that. So as a company, we really don't break it down into separate categories.
Oh, okay. Any estimates or any percentages or just a vague figure?
Well, what is your intent? What is your purpose behind that? Because they are both very, highly technological businesses. They are not like road building or electrification. What we do in material handling is high profit margin, and so is FGD. So that's why there's not like a substantial difference. So whether we are doing FGD or material handling, for us, it's the same thing because many of the clients could be the same clients who are also looking for similar projects.
Oh, okay. So both of them are offered like a package to a client, right?
Yeah, because they may have a boiler and which requires an FGD system, and they have a material handling system requirement also for coal handling or ash handling as well. So things like that. Yeah.
Okay. Thank you, sir. And just the last question. Can you just give a estimation of the current order book of the company?
That is also, we have never talked about that. We don't release that information. We have never done that as a company policy. So we have a healthy order backlog. We have a lot of repeat business from established customers. So it's an ongoing, we feel good about our current situation.
Okay. Okay. Thank you very much, sir. Join back the queue.
Thank you. The next question is from the line of R.V. Malhotra, an individual investor. Please proceed.
Hello, am I audible?
Yes, ma'am.
So on carbon capture R&D, have we completed lab validation or are we already at pilot stage testing?
We have done lab validation and we are right now currently doing pilot testing.
Okay, so are we developing the solvent technology in-house or through external technical collaboration?
No, this is something that we are doing ourselves. We are working with a research lab where we are conducting this research. So this would be our own technology. We are not collaborating with anybody.
Okay,
because you see, we are in air pollution control. So carbon dioxide is also one of the gases like sulfur dioxide, hydrogen chloride, nitrogen oxide, so many gases. And Ducon has been around since 1938, and we have thousands of projects and experience how to handle these gases. So we have a lot of expertise in-house, and over the years we have been working internally to have the solvent. So we tested those solvents on lab scale, and now we are doing in a pilot unit, and we are already actually working on a design which will be a small industrial size unit that we will work with one of our clients and have a demonstration plant set up. So that will be the next thing that we will be doing.
Okay, so like what kind of client profile is showing early interest, power, cement or refineries?
Well, see, everybody is showing interest, and we are working with even chemical industries, oil companies, and cement plants. Yeah.
Okay. Okay. So would CCUS projects require higher upfront working capital compared to standard EPC?
What is your question again?
Would CCUS projects require higher upfront working capital compared to standard EPC?
Well, see, it all depends on the size of the project. And generally, as we grow in our size, we will need more working capital. But initial projects would be an investment made by the client itself. And then we try to work on the payment terms that minimize the working capital requirement for us. So it's depends on project by project basis. It's difficult to say at this time.
Okay. So realistically, when can this vertical start contributing to revenue, like FY27 or later?
Well, we hope that it happens soon, but it's difficult to. I cannot give a specific timeline, but we are moving in that direction, and then we are confident with the government's budget that they have allocated 20,000 crores of investment, so which would also help our clients. So we are very confident that this will happen sooner than later.
Okay. Okay, sir. Thank you. Thank you for answering my questions.
Thank you. The next question is from the line of Parag Shah from Shah Infra Tower. Please proceed.
Okay, good afternoon. So I have some couple of questions. So for the 9-month revenue stands at 321 crores. How much of this was from carry forward orders, like versus from fresh executions?
What is the question again?
Yeah. So my question is, 9-month revenue stands at 321 crores. Okay, and how much of this was from carry forward orders versus fresh executions?
Well, see, our projects run very long cycles. They can be 2 years, 3 years projects. We are not, in a big project, sometimes there is engineering, can last 6 months. So it's when you say fresh order, it's not like we are taking something and delivering it right away. These are large turnkey projects. So a lot of the revenue that comes, some of it could be a small portion from new orders and another bigger portion from existing orders. You follow what I'm saying? Yep.
Yes, yes. And if they are large in orders, then can you say that have we seen any execution delays in Q3 that could shift into Q4?
Oh, yeah. So there are always, each project depends on a client because sometimes we are doing work and then there are, let's say, civil work is done by someone else. L&T could be doing and they are delayed, which delays because our equipment goes on top of that. So each item and sometimes our equipment has to interface with some other equipment in the plant and that equipment is not ready. So there are many factors. So each project equipment, sometimes there are delays and so it's quarterly. We cannot really look in our business on a quarterly basis. Sometimes we are not able to do the billing because the client is not ready. So there are many factors such as that. It's very difficult to quantify it's not like a single project or something like that.
Okay, great. And can you also tell about some execution as well? Like what is the typical execution cycle for emission control projects currently?
Yeah, let's say I'm just giving an example for an industrial client. Suppose it's a 20 crore project. It could be 1 year, but if we get 100 crore or 150 crore for a power plant, it could be 2 years, 2.5 years. So it all depends. If we get a very small order, which is a modification of some existing item, which is 5 or 10 crore, that could be done in 5-6 months. So it all depends on the size of the project.
Okay. So at the end, can you also speak on can you give some clarity on your conversion timelines? Are tender conversion timelines actually improving compared to last year, sir?
Tender conversion, I wish I could say that, but it all depends on government has its own issues, private sector has their own issues, and they do. Fortunately, there are enough projects because of the space that we are in, and we are not dependent on one particular market, and that's one of the areas where we are also now getting into newer areas, where with this carbon capture, and also we are getting into the digital. We are developing a platform, AI platform. So we are hoping to have a accelerated revenue in the coming years with additional, sources of revenues that we will have. Yeah.
Okay. Thank you so much, sir, for giving the clarity about the business. So yes, that's all from my side. Thank you once again, sir.
Thank you. The next question is from the line of Anuj Pathak from Oak Lane Capital Management LLP. Please proceed.
Yeah. Thank you for the opportunity, sir. So sir, your Q3 EBITDA margin was 6.19%. So was this due to any specific kind of project mix?
Yes, you're absolutely right. It all depends on some projects mix also. Yes, even though we are in a as I said earlier, profitable margin, but still some margins may vary because we work with large clients, and sometimes we have to help them out because of their budget constraints and all that. We have a lot of repeat business, and so it's a function of that, and then timing issues. I don't know, Harish, if you can add anything to that. Yeah.
Yeah. Basically, sir, now, as you know, we have two major EPC segments. The margin varies, and now I cannot say there is a standard margin in both the segments. Even within the segments, even projects-wise, margin varies. And even within the project, the billing-wise also margin varies. Because, see, as you would be aware, being an EPC company, we work on BOQ basis. Now, certain things, the cost varies slightly during the time of billing. I'm talking about the procurement cost. And in some cases, we get, better margin. And the margins are like when we prepare the BOQ, it's not uniformly, applied throughout this thing. So it varies, depending upon that.
Okay. So, sir, if you could just elaborate on your fixed versus variable cost at revenue scale, it would be helpful.
Yeah, see, actually in our business, our fixed cost is variable cost is basically for the project and the direct cost for that project. And so if our revenue grows, then our bottom line will increase also, because we won't need that many same engineers that we have, same staff can handle a lot more projects. So, and we are not like doing any manufacturing ourselves, so we don't have huge capex also. So it's a matter of growing the top line, and then profitability would be substantially higher.
Yeah, I would like to add to that. Basically, substantial portion of our, expenses are variable cost. Fixed wise, in fact, very bare minimum thing, the employee cost, or maybe even we have our own fees and everything. And site setups, we we do the site setups after the receipt of the order. So the component of fixed cost is very less in our case.
Okay. Also,
Yeah.
sir, are we executing any low margin legacy contracts which could be weighing on the blended margins?
No, we used to do some of those projects in the past, but as of right now, we are not doing any such project.
Okay. Sir, one last question I have is, so our margin improvement is more dependent on scale, or is it better project selection?
What? Could you repeat your question?
Sir, yeah, I was asking if our margin improvement is more dependent on scale or on better project selection.
It's both. Both items.
Okay.
Yes. Yes.
Okay. Thank you for answering the questions.
Yeah.
Thank you. The next question is from the line of Udit Gupta from Northern Genius Acquisition Corp. Please proceed.
Hello. Am I audible?
Yes, sir, you're audible. Please proceed.
Yes. So thank you for the follow-up. Actually, I had one more question regarding the IQ Energy AI platform that the company launched in October, I guess. So could you please share how's the response on that? Are we seeing any revenues from that segment?
We are still in the launching phase because we have not actually we announced it in October, and we are still training. You know what we do with the data training, our AI model. We are working on that, and we will be actually going out full maybe in another couple of months, where we will be actually soliciting customers. But right now we are still testing it and working with one or two of our existing clients and using their data to figure out optimize the platform.
Oh, okay. So in a couple of months we can see the actual product launching, right?
Yeah, it will take time, obviously, but we have an existing database of customers because Ducon, we also have globally, Ducon is a global company. We're going to be using customers, foreign customers. We will also be an Indian customer. So we'll be, reaching out to globally customers. So we hope, it will be a big thing because power and energy is definitely in big demand, and with the data centers and taking and so much energy demand, the existing facilities want to optimize every megawatt they are generating and using, the industrial plants. So any savings would be a big saving, and so that would be. We are very, very excited about this platform.
Okay. Thank you very much, sir.
Thank you. The next question is from the line of Pooja Mishra from JK Capital. Please proceed.
Hello.
Yes, ma'am.
Am I
Please
audible?
proceed.
Yes, so my first question is, what is the current focus of Ducon air pollution solution segment or other EPC material handling projects?
We can't hear her. Please, could you repeat? Speak up louder.
Yes, sure. So, can you tell me about what is the current focus of Ducon air pollution segment or other EPC and material handling projects?
Yeah, our focus is on larger projects. We work on, projects which are in almost million normal cubic meters per hour for 50 megawatt, 20 megawatt, up to 400-500 megawatt in size. for air pollution control, which is sulfur dioxide and particulates as well. And then that's in big demand here because even for now that government is talking about CO2 capture, carbon capture, to do carbon capture, you must first remove other pollutants also. So regardless, companies would need to do that. So we are very active. Everybody knows of Ducon because Ducon is one of the initial companies which had a seawater air pollution control system operating in India and also a limestone generating gypsum at Udupi power plant. So, and in material handling, we are one of the premier companies for where we do work with alumina handling, which is very, very important aspect where we work with the companies such as Nalco, Vedanta, and Hindalco. And then we are also very active in, ash handling systems and other raw material handling systems.
Okay, so my last question is where we can see Ducon in the next 5 years?
Well, we hope to be much bigger in size and in many, many areas which are cutting edge technologies, and that's where we are expanding. So Ducon will keep growing, and we are confident that we can achieve great success in the next coming 5 years, both in the top line and in profitability.
Okay, thank you, sir. That's it from my side.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. I repeat, to ask a question, please press star and 1 now. The next question is from the line of Singha Raju Ram from Omvriti Holdings. Please proceed.
Hello, sir. Am I audible?
Yes,
hello,
sir.
Sir.
Audible.
Yeah. Sir, we have a net plug of only 3 crores, which is very low for a technology company. So please clarify, does the Indian entity own the IP for the CCU solvents, or does the patents belongs to the US parent? And also, any royalties involved that we are paying, sir?
I'm not able to understand your question, sir. Could you repeat slowly?
Sir, we are having a net plug of only 3 crores. Net plug of only 3 crores we are having, sir, which is very low for a technology company. So please clarify, does the Indian entity own the IP, that is patents, for the CCUS technology, or does the patents belong to the US parent? And also, any royalties involved that we are paying to US parent, sir?
No, we are not paying any royalty to anyone. There is no royalty being paid. Okay, we technology. And as we said, go ahead. Yeah.
Sir, then the IP belongs to whom, sir? Indian listed entity? Property technologies belongs to whom, sir?
I'm not sure, but I think we addressed the profitability and the profit margins earlier in our call. So I hope you were able to, you were there at the time. We talked about that. It's a question of product mix and the projects that we are executing, and it's a question of both the type of projects and the scale.
Yeah. Sir, we have a net plug of only 3 crores. Hello, sir.
Sakshi, can you understand what he's saying? Can you tell me?
Sir, we have a net plug of only 3 crores, which is very low for a technology company. So how much of intellectual property we own, the technology for the CCUS, or that and the technology belongs to the US parent?
Yeah, I'll answer that. As the chairman said, there is no technology fee or the royalty which is being paid by Ducon. So under both, FGD or material handling, so we are not paying any technology fee or royalties. And as far as the profitability is concerned, it has already been clarified. It is you have seen higher margins earlier, and it varies. It's not quarter to quarter we are getting the same percentage. What factors we have already explained.
Okay.
Yeah.
Sir, our cash flows from operations remains negative, and receivables are also very high. When do you see this trend reversing?
Yeah. So as you're aware, EPC, the business model itself is like that. There are payments which are coming on the milestone basis. So till that final, handing over happens, the last payment also, gets retained in the receivables. So that is the root cause. So routinely, whenever we complete the projects, we realize those amounts.
Okay, sir. Sir, then my next question is regarding the promoter.
Sorry to interrupt, sir. As there are more participants left in the queue, can you please rejoin the queue?
Okay.
Thank you, sir. The next question is from the line of Saket, an individual investor. Please proceed.
Hello.
Yes.
Hello.
Yes, sir, you're audible. Please proceed.
Yeah. So my question was in regards to the company's business. FGD seems to be a big portion of the company's business. And from what we understand with calls to many other companies, bigger companies, they said the FGD business is almost reducing now. So what's the management take on that?
Yeah, go ahead.
Yeah. FGD, it is not going away, even though there is a notification on, certain relaxation for certain categories. As of now, there is no impact at all. And that was a temporary kind of relief given to the power plants because they have to spend a huge capex for the installation of FGDs. And the basic requirement of removal of sulfur for arresting the carbon, carbon capture, that itself shows that FGD is here to stay. And considering India's commitment to the global community, so this is going to stay for a very long time.
So can you give some light on the order book situation of the company?
See, as far as order book is concerned, we had in fact answered same question.
So maybe I was not there in the call, if possible.
Yeah. So basically, the nature of our business and the competition in this narrow segments, it doesn't permit us to disclose the order books and all.
Okay. So final question I had, our company is listed for quite some time, and our company has just started this con call this quarter after a long time, maybe sometime 7 years back they had done con calls. What transpired for this change? Is there anything happening in the company that is the management wants the investors to know, or because we are not doing con calls for last several years now?
No, you're right. We are not, because we are getting into a lot of new areas, which we are very excited about and confident. So we are expanding our capabilities also. So that's why we are now trying to reconnect with the investors and the investing community and let them know what we're doing.
Yeah, we want the communications to happen. That was the basic reason. So that there is better understanding from both sides.
Okay, so we'll have every quarterly now with con calls?
Yes.
Okay. Thank you so much.
Thank you. The last question is from the line of Ronit, an individual investor. Please proceed.
Hello. Thank you for the opportunity. Sir, I wanted to ask if there's any update about the arbitration case between Ducon and BHEL. I think there was a news in early 2025 about this.
Yeah, that is
Yes.
it's still going on. Arbitration. It's in arbitration, so we can't go in too much detail because. But we are very confident, in our position.
Currently, the arbitration is going on. It is an international arbitration, and it's being represented by both the parties. So it's going on. Yeah.
Thank you. I just one more quick question. Actually, these are two questions, but going to be quick. One is, in the future, are you planning to raise your stake in the company? Like currently, it's 38%. Everything looks really great on the balance sheet and overall. The only thing that bothers me is the shareholding of the promoter. And second question is about the debt levels. Are you planning to reduce it or take further debt in the future to expand?
Okay, so the promoter shareholding, it was very high at one time. When I had 70%, a lot of people used to say your holding is very high. You need to have more public investors. So it's still quite substantial. It's not a low percentage compared to many other companies. So we can definitely increase it at any time. That's not a problem. And what was your second question?
The debt levels, are you planning to reduce it or planning to take more to expand further in the future?
No, we have actually already reduced our existing debt quite a bit, and our effort is to continue to keep reducing the debt in the future.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand over the conference to Mr. Sakib Njiara from Kirin Advisors for closing comments. Thank you, and over to you, ma'am.
Thank you, everyone, for joining the conference call with Infratechnologies Limited. If you have any further queries, you can write to us at research@kirinadvisors.com. Once again, thank you, everyone. Thank you, Arun sir. Thank you, Hari sir. Have a good day.
Thank you very much. Yeah.
Thank you all.
Thank you.
Thank you. On behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.